Welcome back. Today we're taking a detailed look at the latest developments surrounding the Iraqi dinar and the US dollar exchange rate as of July 2026. If you follow Iraq's economy, currency markets, or the possibility of future monetary reforms, this update brings together the latest verified information and explains what it means for ordinary citizens, businesses, investors, and anyone interested in Iraq's financial future. Point 1. Of the biggest questions people continue to ask is whether the Iraqi dinar has been officially devalued or whether the Central Bank of Iraq has changed the official exchange rate. The answer remains no. The Iraqi government and the central bank have once again confirmed that the official exchange rate remains approximately 1,300 Iraqi dinars for every $1. This means there has been no official decision to move the exchange rate to 1,600 dinars per dollar or any other figure that has been circulating on social media and various unofficial websites. Authorities have publicly rejected these rumors and have emphasized that no such decision has been made. Rumors about exchange rate changes often spread very quickly because currency values affect nearly every part of the economy. When people hear that a currency might suddenly lose value or gain value, many rush to exchange money or make financial decisions before confirming the facts. This can create unnecessary panic in the market. That is why the central bank continues encouraging citizens to rely on official announcements rather than unverified reports circulating online. Although the official exchange rate has remained stable, the situation in the parallel market tells a different story. Throughout the past week, the US dollar has continued trading at a considerably higher price in Iraq's cash markets. In Baghdad, exchange markets have been trading close to 1,540 Iraqi dinars for $1. Currency exchange shops have generally been selling dollars at approximately 1,545 dinars while buying them at around 1,535 dinars. In Erbil, rates have remained slightly lower but still well above the official exchange rate, with trading around 1,538 dinars per US dollar. This difference between the official exchange rate and the street market rate continues to be one of the most important economic challenges facing Iraq today. The official rate is primarily used for government transactions, banking operations, and authorized imports that qualify under the central bank's foreign currency system. However, many individuals and businesses still depend on the cash market because they cannot always obtain dollars through official banking channels. As demand for physical dollars increases, the market price naturally rises above the official rate. Many viewers wonder why the dollar remains stronger in the parallel market even though the official exchange rate has not changed. Several factors continue contributing to this situation. One of the biggest influences is regional geopolitical uncertainty. Ongoing tensions involving the United States and Iran continue affecting financial markets across the Middle East. Whenever political uncertainty increases, investors and businesses often seek stability by holding US dollars rather than local currencies. This increased demand naturally places upward pressure on the dollar. Another important factor is the continuing demand for cash dollars inside Iraq. Many businesses still prefer conducting certain transactions using physical US currency, particularly for international trade or large commercial purchases. Because the demand for dollars remains high while access through official banking channels is carefully regulated, shortages can develop in the cash market. Whenever supply becomes limited while demand remains strong, prices increase. Restrictions on cross-border dollar transactions have also played an important role. Iraq has continued implementing tighter oversight of international financial transfers in cooperation with international banking standards. These measures are designed to improve transparency and reduce financial crimes, but they have also limited some methods that were previously used to obtain US dollars. As a result, more people have turned toward the cash market, increasing pressure on exchange rates there. Anti-money laundering regulations remain another major influence. Iraq has continued strengthening its financial compliance systems to meet international standards. Banks now face stricter requirements when processing foreign currency transfers, verifying customer information, and documenting international transactions. These reforms are intended to strengthen Iraq's banking system and improve confidence among international financial institutions. However, stricter compliance requirements can also slow access to foreign currency for some businesses, creating additional demand in the parallel market. The Central Bank of Iraq continues emphasizing that these reforms are necessary for the country's long-term financial stability. While they may create temporary challenges for some market participants, officials believe stronger banking regulations will ultimately strengthen Iraq's economy and improve investor confidence over time. Another significant development involves tighter controls over cash dollars carried by travelers. The central bank recently reduced the maximum amount of cash dollars that travelers may obtain under official procedures from $3,000 to $2,000 per adult. Officials describe this change as an administrative adjustment designed to improve the management of foreign currency resources rather than a sign of financial weakness for many travelers. This change simply means planning more carefully before international trips. For the central bank, however, it represents part of a broader strategy to ensure that foreign currency resources are used efficiently while reducing opportunities for abuse. Authorities believe that better management of dollar distribution can help reduce unnecessary demand and strengthen oversight of foreign currency movements. The government has also intensified its campaign against illegal currency trading and dollar smuggling. Security agencies have continued conducting investigations into suspicious financial activities, including attempts to move large amounts of cash across Iraq's borders without proper authorization. Reports of airport currency seizures demonstrate that authorities are taking these efforts seriously. Dollar smuggling has long been considered one of the factors contributing to instability in Iraq's exchange market. When large quantities of US dollars leave the country through unofficial channels, fewer dollars remain available within the domestic market. This reduction in supply can contribute to higher prices in the parallel market. By increasing enforcement efforts, Iraqi authorities hope to reduce illegal outflows and improve the availability of dollars for legitimate economic activities. The campaign against illegal currency trading is not limited to airports alone. Financial authorities continue monitoring exchange companies, money transfer businesses, and commercial transactions to ensure compliance with existing regulations. Businesses found violating financial rules may face penalties, investigations, or restrictions on their operations. Officials believe these measures are necessary to protect Iraq's financial system and strengthen public confidence. At the same time, Iraq continues moving forward with broader banking and monetary reforms. One important recent development has been the appointment of a new governor for the Central Bank of Iraq. Leadership changes often attract significant attention because the central bank plays a central role in maintaining monetary stability, supervising commercial banks, managing foreign currency reserves, and implementing financial reforms. The new leadership inherits both challenges and opportunities. Iraq possesses significant oil revenues that provide valuable foreign exchange earnings. These revenues continue supporting government finances and help maintain substantial foreign currency reserves. Strong reserves give the central bank greater ability to defend the official exchange rate when necessary and maintain confidence in Iraq's monetary system. However, maintaining stability requires more than strong reserves alone. The banking sector continues undergoing modernization aimed at improving efficiency, expanding electronic payment systems, encouraging digital banking, and increasing financial inclusion across the country. These reforms are expected to reduce dependence on cash transactions while making banking services more accessible to individuals and businesses. Modern banking systems are essential for economic development. When businesses can access reliable financial services, process payments efficiently, and obtain financing through transparent banking channels, economic activity generally becomes more productive. Iraq's modernization efforts seek to create these conditions, while strengthening confidence among both domestic and international investors. Strengthening anti-money laundering compliance remains another major objective. International financial institutions increasingly require countries to demonstrate strong regulatory frameworks before facilitating cross-border financial activities. Iraq's continued efforts to improve compliance may help strengthen relationships with global banks and encourage greater foreign investment over the long term. Improving confidence in the Iraqi dinar remains another important goal of these reforms. Confidence cannot be created through announcements alone. Instead, it develops gradually as citizens observe stable monetary policies, effective banking services, responsible government financial management, and consistent economic performance.